Okay, folks, welcome to the members stock pick request video. This is Bob Desmond at the Contrarian Trader. This video is where I review submissions from members of stocks that they're interested in. I review the charts, it's free of charge to members only, and I annotate the charts. I give a deep dive analysis of them. Some of these symbols will make it onto our watch list, and that will be provided to members over the weekend. If you're currently watching this on YouTube, please subscribe to my channel. If you're watching this on the website, please enter your email address. You get notified of when I make these videos. When I send out the best stock picks videos, those are the stocks that make it onto our watch list, as well as trade reviews that we've recently performed. So we hate spam too. You will not be spammed, I can guarantee you that. Let's begin with the obvious question. How did we do last week? Well, we did fairly well. And for that matter, we're doing fairly well for the year. While the Russell 2000 is down about 10% on the year, we've been short from the very, very top. You can go back to December on my blog where I was saying we were bearish on the market. It's free. You can check it out. We've been saying this market will go into a correction, and sure enough, we are negative on the year. We remain short of the Russell 2000. There's a decent probability that we will be adding to this trade. And for those members who are interested in getting short of the Russell 2000, just send me an email and I will let you know when the best entry point is for that trade. Last week we booked profits in CNSI. This is an extreme oversold stock, and we were looking at it while it was in its death spiral. And then when there's blood in the streets, that's when I like to go shopping for stocks, and that's where we get the Contrarian Trader from. We're contrarians, where everybody else hates a stock. We like it. We bought it in increments, moving down to the lows seen the prior week, and it shot higher. We booked a small profit on it because I didn't like the topping tail. Only $350, very, very small profit by our standards, but it was a profit nonetheless. A number of our members joined in on that trade, and some of them did better than I did, which is great. I love to hear that. I laugh only because I love seeing successful members. Next stock that we booked profits on was IPCM, the Hospitalist Corp. Another one that was in a death spiral. We saw opportunity down here. We bought it up. We took profits of $3,760 on this trade. A great trade. We did not get out at the highs. We got out here. The stock pulled back, retested support, and continued to rally. If you're still long of the stock, I would remain long of the stock. I think it's a great looking stock. Lots of shorts in the name. However, we booked our profits. We moved to the sidelines. And the last stock we booked profits on last week was ZIXI, Zixik Corp. We were watching it again. As you can see a trend here, folks. The market was selling this stock off dramatically. It hit our criteria for extreme oversold stocks. We opened up a position, and sure enough, the shorts got squeezed. And when I saw this topping tail here, I just booked profits and moved to the sidelines. And I think that we're going to get a pullback on Zixit. So first out, best out in this trade. And we booked profits of $960 on that trade. So overall, a really, really good week. Our longs did very, very well. Our short of the Russell 2000 did very, very well. Do we win on all our trades? Of course not. But I will say when we do take a loss on a trade, and it's not all about winners. So let's get to the stocks that our members submitted for review. And I'm going to break this up into two videos because there's so many. It's a very, very popular feature that we offer, and I try to accommodate all of our members. And let's begin with Bob's choice of AERO. It's a weekly chart. We believe in multi-period charting. And we'll take a look at the weekly and monthly charts. On a weekly basis, it's pulled back off of its highs down to, say, the $5 per share level where we're retesting support. It was as low as $4.48. The key is for this stock to hold this support level, this key support level, because if it closes below it, it's heading down to $4.80 once again. I would not buy the stock until we broke out above this declining downtrend line and spent a couple of days, at least 3 trading days above that support level. Volume was relatively weak last week. Let's move to the daily chart. You can see it's flirting with trying to break out above the upper band of the declining downtrend channel. Again, it needs to close above the support level. I have a 3-day rule. It's got to spend 3 days above the support level. It's got to behave well, meaning got to retest the support level. Bottoming tails imply that there are buyers below, meaning this what was resistance or what is now resistance should then act as support. Very, very critical. It's a show me stock. Stoke RSI is in an uptrend. Stochastics beginning to show signs of life. Good double bottom setup on Stokes. Williams percentage R breaking out. So AERO is setting up nicely. It's a show me stock. Next stock up is from Mike. ALU, Alcatel-Lucent. I remember when this was just Lucent. LU the symbol. I was trading this back in the 90s when they spun off from good old Ma Bell or AT&T. Okay, so this is a weekly chart. Again, multi-period charting. And you can see the markets send you signals. I say this to my members all the time, and I'm sure they get sick of me saying it, but I'm repetitive for a reason. It's because it's ever so critical. Were you long of this stock? Here, you should have been watching the weekly charts and should have appreciated that there was resistance or buyers back here and expected some sort of resistance. Does the fact that there are buyers back here mean that the stock can't head higher? No, it doesn't. It just means that it's going to be a struggle. There's overhead supply. So this was kind of your signal back here to get wary, because we flashed a doji star formation, a little bit of topping action at resistance. We pulled back, formed a base at say 425. The minute that we broke below that base, I think that you should have booked half profits. Once we rallied, put in a lower high, the second round of profits should have been taken, and then you would have gotten out and would have been able to look back and said, okay, we're bottoming at $3.50. The risk to reward is now in my favor. Then you could have gotten back involved with the stock. Now we're looking at the stock a few weeks later, and it is trading off of those lows. Resistance at this declining downtrend line. It's got to close above this downtrend line for me to get excited about it. And it's got to spend a couple of days above that level. I don't know whether we're going to get that. The Stokes appear to be poised to roll over. Is that a guarantee? No. The Williams percentage R is an uptrend. All of these stocks, for the most part, I'm going to go over today, due to the sell-off recently, are all show-me stocks. They need to show me strength, especially relative to the markets. On a daily chart, I've become a little bit more pessimistic about the stock. It's because the RSI is in a downtrend. We broke down below the 50-day moving average. You can see that Thursday we put in the bottoming tail, acted as support. Friday just sliced right through it like a hot knife through butter. I'm concerned about a continuation breakdown below the 200-day moving average. If that happens, you need to be worried about the death cross. The 50-day moving average threatening to take out the 200-day moving average. A very, very bearish event. Volume to the downside rose on Friday. Slow Stokes are breaking down. This is one that I would avoid right now to see how it behaves. If it pulls back and finds support as it did back here and flashed a key reversal on the 200-day moving average, then perhaps my attitude would change. But as of the time of this recording, Saturday morning at about 7 o'clock in the morning, I am not bullish on ALU. I would avoid right now until it can show me signs of strength. It needs to show that there are buyers below. It's not showing me that right now. It's showing that there's some distribution going on. How do we know that? It did not hold support, and volume to the downside grew on Friday. Never, ever good for longs. For shorts, it's a different story. Bank of America, BAC. I mentioned earlier that I talk about when I take losses, and we stopped out at Bank of America a couple of weeks ago. Thank God we did, because now it's trading even lower. We broke down below support last week, so on a weekly chart, it is not looking all that healthy. The XLU is not looking healthy. That's the financial ETF. And as I always say to my members, as goes the banks and the Russell 2000, so goes the rest of the market. Now, the one bullish sign I will say for BAC is that 1450 is fairly good support. So if there's a defense that should be put up, it should be put up right here, because if it breaks down, it's going down to 1359. Now, the reason why I think that we may get a rally on BAC is because we have bottoming action. Thursday, bottoming tails. Friday, bottoming tails. So while we have this bottoming action, would I look to BAC as being an investment right now? No, I would not. I would look at it as a trade only, and there's a reason. And the reason is because it's trading below both its 50 and 200-day moving averages. The 50-day moving average is picking up momentum. The longer we stay below the 200-day moving average, the faster or the more momentum the 50-day moving average will gain. So we'll get a rally, I am fairly confident, up to 14.75 to 15 on BAC. That's not enough profit margin for me to take on the risk. But all the while you're making this trade, or you're thinking about this trade, keep in mind that this 50-day is gaining momentum. Now, if the 50-day moving average crosses below the 200-day moving average, that's a bearish event. Very, very bearish. I would not want to be long of BAC when this event occurs. However, stocks tend to rally short term after this event occurs, a few days after. So there will be a trade in BAC after the event occurs. Will I stick around long as an investment after that? No, it's going to be a trade only. Right now I'm looking at BAC as a trade. And there's two reasons for it. As a trade off of Friday's lows and a post-death cross trade. Okay, next stock up is DRYS, Dry Ships Inc. We've traded this multiple times in the past. A great trading stock. We like TNK, DRYS, great trading vehicles. Okay, so what you have here is a double bottom setup. I like it. We're holding support. I wouldn't buy the stock unless we got a breakout above this declining downtrend line, and it must hold there. The concern I do have about it is that it is trading below its 50 and 200 period moving averages. This is a weekly chart, folks. So all the more difficult to get through these averages. So I do think that it's setting up well for a potential short squeeze. Now, if you break down below 278, forget it. It's all over. We're heading a lot lower on the name. So I would avoid it if it does occur. So it's a show me stock. It's got to break out above the upper band of the declining downtrend line, and it must trade there for a couple of trading days. And this is a daily chart. It attempted that breakout on Friday, and it was repelled. So it needs to make that rally higher, close there, consolidate 3 consecutive days, and then it's poised for a nice rally. RSI is looking good. And this is for fellow member Owen. So again, I like this bottoming action, but it is a show me stock. It's got to behave well, and keep in mind that you have your 50-day moving average. It has crossed below the 200-day moving average. It's going to act as a declining ceiling. Remember, so that when this stock rallies, or if this stock does rally and it rallies into these moving averages, there are going to be sellers there. So just be forewarned. I like the ultimate oscillator, making higher lows, double bottom setup off of 30 back here, rally, pulled back, made a higher low. Slow Stokes are looking good, so I like DRYS looking good. Forest Oil Comp, FST, this is one I've gone over in the past. Double bottom setup on a weekly chart, rallied up into resistance at the declining downtrend line. Stokes are looking good. MACD has gone positive on a weekly basis. Let's get to the daily chart. Weekly chart's not telling us much except for the fact that there is resistance up here. And note the topping tail. So this flood of people that got hammered like baby seals, they want their money back. All right, daily chart, looking a little bit more constructive. All right, so here's our breakout point. We've pulled back, and now we're in a triangle formation. Support at 211. If we close below 211, we're going to come back down and fill this gap. We need to hold this support level. So from a bullish perspective, if I wanted to get long of FST, it's got to close and trade above the declining downtrend line or the upper band of the triangle formation, whatever you want to call it. Just take your crayon, draw a line, name it George if you want. It doesn't matter. Okay, so if it trades above this downtrend line 3 consecutive days, then it's off to the races, and I would expect to fill the gap here at the, say, 280 level, 285 level, and then look to book profits because you're going to have a lot of resistance up here, and that will be a fairly decent profit for you on this trade. So you know you're in, you know you're out. I don't like the ultimate oscillator. Can't close above 50, but price action trumps the oscillators. Okay, so it's in a consolidation. What this consolidation mode does, it skews the oscillators a little bit. All right, so FST, we're constructive on. Again, it's a show me stock. Next stock up is for JT, longtime member, good guy. FTEK, Fuel Tech Inc. Weekly chart. In the consolidation mode. Bearish week last week. We managed to close off the lows of the week. I'm trying to find the trade here. I'm seeing consolidation. Weekly chart's telling me consolidation is in the crystal ball. And if we close below 490, we're heading back down into the mid 450 range and possibly even lower. So if you're long, you really need to set your stops just below 490 on a closing basis and get out. Let's take a look at the daily chart. Okay, daily chart of FTEK. All right, struggling a bit. Yeah, the 50-day crossed below the 200-day moving average, so we had our rally off of that event being in the rearview mirror. It's a fight to get above 550. All these buyers back here who enjoyed the rally, never bothered taking their profits, got hammered down here, now want out. This is the psychology of the markets. So we need to respect the fact that we have a ton of overhead supply in this name. It's fighting like the devil to get above this 550 level. If it crosses above it, sure, okay, go ahead and nibble, but just keep in mind that you have a lot of resistance above it, and you have your moving averages above as well to get through. So there needs to be, this is a stock that there needs to be a lot of shorts involved with to get a catalyst going, or it's got to have fantastic fundamentals. The question I would have with a name like this is, what is going to act as a catalyst to get me through all of these buyers and these moving averages? Is it the fundamentals? Does it pay a big fat dividend, or is there a short squeeze at hand? Those are the questions that need to be asked. And if the answer is sure, there's a ton of shorts in here, multi-day short squeeze potential, absolutely, go for it. But absent some real serious catalyst, then I don't see a trade here. It's just too much risk to reward. There's plenty of other stocks out there to trade. And especially since the fact that these high beta names, they're getting hammered. They're not in favor right now, so why fight the market? Next stock up is for fellow member Bob, GLUU, Glu Mobile Inc. This is a daily chart. I really need no further than the daily chart on this one, because we're just barely holding on to the 200-day moving average. If we close below the 200-day moving average, the probability of us taking out support at 361 is very, very good. And if we close below 361, we're heading down to 340. So this is a show me stock. If we pull back to the 360 level, flash a key reversal, and we close back above the 200-day moving average, then I get more constructive. As of right now, it's a stock that's breaking down on price. It's breaking down on the oscillators, the RSI. Volume to the downside, although below average, is growing on a sequential basis. I would avoid GLUU right now. Even on a weekly chart, it's threatening to take out this support level. And if it does, Bob, it's going to go considerably further. So I would not be a buyer of it until it could tell me or show me that it's got demand. And it showed me that it had demand back here. It showed me it had demand back here. How so? By these bottoming tails. This is a sign of support at the support level. Are all these buyers filled up with shares now? That's the question. Is there any more demand at 370 for the name? And it doesn't appear probable that this support level is going to hold. Could it? Of course it can. But as of the time of this taping, it does not look bullish. It's one that we'll continue to monitor for you. If you want, just send in the symbol on this member stock pick request, and we'll definitely keep an eye on it for you. RSI remains in a downtrend on a weekly basis. Next stock up is for Karen, GOGO. This is a weekly chart. This is a new issue. Weekly chart really doesn't help us all that much on new issues due to the fact that there's just not enough data for us. I mean, historical support, the moving average have really not matured yet to make these oscillators effective. So just purely on a price basis, the stock showed very, very good support. This is your pivot point back here in August. This is critical support at the, say, 1166 level. 1166 is critical support because when it broke through the support level, the following week we took off like a rocket ship, and we went from 1166, or actually 971, all the way up to 3577. So we've pulled back, we bounced off that support level. The question is, will we go directly through this declining downtrend line, which I have little doubt that we're going to touch? And if we pull back, will the support level hold? Now, if we see price action like we saw back here, support, a bottoming tail at the support level, then I would be interested in the name. But as of right now, it's too close to resistance. I would avoid it. Let's take a look at the daily chart. All right, daily chart, GOGO, go. It looks good. We have bottoming tails at the very, very short-term lower band of the rising uptrend channel, if you want to call it that. It's just a support level that it's been respecting, and it respected it on Friday, rallied off that level. This type of price action implies that we will see higher highs. The question then becomes, will we break through this resistance level? So the profit margin for me to take on the risk of buying this stock, assuming that we open where we closed on Friday, on Monday, the profit margin between where we buy and this resistance level is too thin for me to take on the risk. Where I would be interested in it is if we rally and close above this resistance level, consolidate, and then break out. Then I'll be interested, because I think that we could possibly fill this gap up here. And I believe bad news came out on this name, and that's what caused this decline. I don't even know if it was earnings or not. And forgive me, I didn't go over the news on all these names, but I believe something came out in the news on this stock. So maybe that news is in the rearview mirror, and we have enough shorts in the name that could squeeze the stock higher up to 17. Then I would look to book profits on the name. This is one that we may add to our watch list. I'm not quite sure yet. We'll go over that on the weekend commentary. Just remember, I didn't credit Fernando. Hey, Fernando, I know you mentioned the FST. I didn't give you credit, pal. Sorry about that. We went over GOGO. Okay, GORO. That's for fellow member Rich. Hey, Rich. Okay, we've traded this name a number of times. We were watching this one, and I had hoped for it to make lower lows, and it didn't reach our price target. Therefore, we didn't get involved, and the stock skyrocketed higher. Rich, I hope you bought this one. I hope you got involved with it. I hope you profited. So we put in a big topping tail, and now we're consolidating. This is a tough one to call. You have the 50-day moving average, which is declining. It's going to act as resistance. You have topping action at what the highs of the day on Friday were, 444. You have a ton of resistance up here. Really, the extreme oversold trade is gone. The easy money's been made because there wasn't much resistance down here to up here, and you could see how it was stopped dead at this resistance level. You have a ton of people up here that want their money back. So would I be a buyer right now? No, I would not be. So I would have to stay cautious on GORO, unless of course it pulled back and put in a double bottom setup. Then I'd become interested in it once again. But as of right now, Rich, I would avoid it, because all we're doing right now, if we were to buy it on Monday, is that we're hoping that it proceeds higher, and we're hoping that these longs here don't want to sell their shares and get their money back, and that's a long shot hope, and I don't want to be a part of that type of trade. So I think that if you have profits from these lows that were I in the trade, I would be out. I would book those profits and move to the sidelines. If the stock rallies, puts in a nice consolidation above these resistance levels, then I would revisit it, and I would revisit it as a long, and I would look to buy the stock. But as of right now, I think the easy money's been made, and I would avoid it. And it could head higher. I'm just going by what the charts are telling me, and it's just, the charts are not about absolutes. They're about probabilities. So the probability of this stock skyrocketing through all this resistance and these moving averages is very, very low, absent takeout news or news to that effect, or a fantastic earnings release. It needs a catalyst, and I'm not seeing that right now, and not in the charts anyway. GTAT weekly chart. This is for fellow member Kate. I always go back to markets sending us signals. It was in a strong uptrend line, and once it broke down below 1535, where you had this bottoming tail, you needed to get out. So now it's pulled back to the lower band of the rising uptrend channel, and we reversed off the lows of the week, showing support. That makes it interesting. Volume to the upside rose last week. Again, interesting. Not seeing much else except for a good support reversal last week on the weekly charts. Now to the daily chart. The daily chart becomes a bit more constructive. So we are now in a triangle formation. We're at resistance. The ideal time to have bought this stock would have been back here at the 1274 level at this lower band. So would I be a buyer of the stock right now? No. It's once again a show me stock. Do I think the odds or the probabilities of the stock hitting higher are fairly good? Yeah, I think they are. But remember what especially members, I hammered the table about this when this market started topping out. We saw a lot of breakout point failures, meaning stocks were breaking out of formations just like this, and then they would fail, reverse, and break back down into those consolidation ranges, and then even break down below the lower band of support. That's how we knew that the market top was in. That's how we knew to add to our short positions, and we made a lot of money in this correction. So while the momentum trade on most stocks is over for the most part, for right now anyway, it'll return. We want to become a little bit more conservative. So what's the difference is probably your question, Bob. So we'll get to it. All right, so the difference is this. When a market is in a correction and we break out, we put in the 3-day rule. It's got to trade above this breakout point for 3 consecutive days. Then the probability of the breakout continuing is very, very high. When the market is in a momentum rally and the momentum trade is working well, you need not do that. All I'm looking for in one of those days is just a simple close above resistance. I'll take the risk because the markets are telling us that the momentum trade is working. Just because I'm a contrarian doesn't make me suicidal or blind to opportunity. When the trade is working for everyone, I want to be a part of that trade. I'm not going to short a stock just because everybody wants to buy it. No, I want to short a stock because everybody is in passionate love affair with the stock and orgy in the street. That's when I want to short the stock. When it's at extreme overbought levels and you have these nuts on TV giving us upgrades at extreme overbought levels and the stock shoots higher, then I'm shorting. And vice versa for extreme oversold stocks. They're downgrading a stock when it's at extreme oversold levels, then I'm buying. And it's worked out very, very well for us. So right now in this environment, we're putting in the 3-day rule. It's got to trade above this resistance level for 3 consecutive days, and then it's got to move higher on that breakout. I would be a buyer. Double bottom setup on Ultimate Oscillator looking pretty good. So that's the story with GTAT, Kate. And Kate, you had another stock you wanted me to get to. I know most everybody had another stock they wanted me to get to. If I didn't get to it on this video, I had so many requests this week. I had to break it up into 2 videos or else my hard drive would collapse and crash. So the next stock up and the last stock for this video is IQNT for fellow member Victor. Victor, who is another one that loves to short the Russell 2000 along with me. We communicate quite often. Victor booked profits on his shorts. Congratulations, Victor. Victor, you want IQNT. Let's get to that one. This is a good-looking chart on a weekly basis. It showed relative strength. What does that mean? What it means is that while the rest of the market, especially the small caps, have been in a steep decline, IQNT has been showing relative strength. Victor, we're going to add this to our watch list. I'm not going to go over the daily chart. I'm going to go over this with members only because I like this chart, and we'll go over a potential entry point on IQNT on the members only commentary, the week ahead commentary, which I'll put out to members either today being Saturday or Sunday. And basically what that is, folks, for non-members, the week ahead commentary is where I review, it's actually 2 videos. This week it's just going to be 1 because I'm doing the member stock pick request. This week it's going to be the market pulse check, and that's where we review the overall health of the markets. How are the major indexes looking, the subsectors, the banks, the semiconductors, how are they reacting? Are they looking bearish? Are they looking bullish? Do we want to get long or short? And then we'll go into the stocks that we're looking to trade. And any of the stocks that I've gone over here that I like, I'll add to our video and we'll discuss those stocks. And this one I like particularly well, so I'm really going to hold back on the information and I'll add it on to the week ahead commentary video analysis. So stay tuned for that, Victor. And I like IQNT because of the relative strength, because of the bottoming tails. We'll go over the rest of the weekly chart because Victor's probably wanting to choke me right now because I'm holding back on him. I like the slow Stokes, how they closed out last week. They looped up a higher low. So there's a few things going on here that I like, Victor. So IQNT we'll go over in more detail. And that's it, folks. Again, if you're not currently a member of the Contrarian Trader, we have a 14-day free trial offer. Cancel at any time. If you like these videos, you like the analysis, if you're watching this on YouTube, please subscribe to my channel. If you're watching this on Stock Twits, please follow me. If you're watching this on the website, please enter your email address. You will not be spammed. I can guarantee you that. We hate spam too. And that's it, folks. Have a great trading week. And I will be sending out another video, a video part 2 of the other stocks my members have requested that we watch and review. So I'll go over that in the next few minutes after I get this out. And I will talk to you soon, folks. Enjoy this weekend. Be well and have a profitable trading week.